Hi everyone, today let's finish the inflation roll-up for the week. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the June inflation data was very good. We saw declining prices for a lot of consumer services and goods. So let's take a look at what those looked like. You can see throttled back here in June. Biggest move down was apples, 12%. You like to see it. But there were several things across the food industry that did go down. Energy also down about 2.5%. Telephone hardware, calculators, dishes, cars down 10%. You like to see that as well. Toys, televisions, 5 and 6% respectively. New cars also down 1.6%, so we're seeing pretty decent moves down across things. Motels and hotel lodging down 2.8%. Health insurance 4.2%, so pretty good across the board. And you can see core goods declined by 1.8% on average for June. And then looking at those CPI data, you can see both of those continuing to step down here. Everything looks good, even more than expectation. We talked about it in yesterday's video. So everything looks good from an inflation perspective. You can see that negative move here on month over month numbers. We haven't seen that in a very long time, so definitely want to see that, and that is good for the Fed and a potential cut in September at this point, and maybe even a second one in December if we continue on this trajectory. So everything looks good on the inflation front. Moving over to the fear and greed index, got up to a 56, just barely enough to get into greed. You can see 51 was the previous close, so did see a little bit of a spike up, nothing crazy, didn't recoup all of the losses by any means, but strength and breadth continue to trend higher. Put call ratio still very, very low at 6.2. Volatility did reject off that trend line just a little bit, and then back into greed on safe haven demand, and junk bond demand has not moved for several days. Moving over to the earnings calendar, you can see we did get a beat from JP Morgan and Wells Fargo. JP Morgan did recover from the slight dip on earnings. Wells Fargo did not. Overall, not a bad start. Citigroup beat on the bottom line, met on the top. So see how that plays as we go into Goldman Sachs and BlackRock on Monday. Moving over to PPI, these actually came in a little bit hotter than expectations, 0.4 and 0.2 respectively for month over month core and headline. And then inflation data from Michigan, flat for 1 year, stepped down here for the 5 years, so that's good. Expected to be in that same range for the next 5 years. But I was definitely a little bit concerned to see these inflation numbers coming in after what we saw on CPI, and you can actually see the previous numbers were revised up a little bit. So this was previously minus 0.2, revised up to 0, and then that core number from 0 revised up to 3. So PPI, not great for May and June, even with the really good CPI numbers that we got yesterday. Moving over to Max Payne, you can see stock price 559.50, ended up getting above that 557 level. Really surprising, honestly. Pretty strong finish, not all the way at the top of the puts. That would have been 562, 563, at least 561, so not quite all the way there. But we did finish in this call range, not at the top of those either. That would have been 565, so not super bullish on the finish, even with the more options, but that higher put call ratio did push the market up a little bit today. Moving over to the charts, look at that move on the S&Ps, really powerful, honestly much more powerful than I would have expected with that big down day we saw yesterday. Briefly eclipsed the closing prices, and you can see the high of day was 563.67, so did get into that range, got towards that trend line, and then rejected really powerfully on the close. Tons and tons of selling at the close. Looked a lot better here on the SPY than the NASDAQ, but either way, that is a rejection again in the same range without touching the trend line. And then looking at those tasty charts here just for a moment, you can see we hit that upper ATR band, the upper ATR resistance, and then we rejected back towards that 8 EMA at 558.81. Probably headed back towards the mid-range there around 557.50 for the Monday session if I had to guess. Big volume on that wick rejection, bearish momentum, so seems like the momentum should swing us down towards that 34 EMA, potentially all the way down to that 555.75 area. Moving over to the NASDAQ here, you can see not as bullish. Did get a couple candles of upside, was quite a bit stronger than I would have guessed. Just barely missed the 500 level. Got above all the EMAs and SMAs on the hourly chart for a moment before giving it back again on that last candle of the day. Was quite bearish. Still holding that 21 EMA there at 493.93. Also held the trend line here. And we did talk about it in yesterday's video. Could have expected a little bit of a bounce here, lower high setup, double top type move, and then a change of trend. The structure is still bullish, so you do have to keep that in mind, even with that massive down day that we saw on the Thursday. Moving over to the Russell and the Dow, big moves here. Let's go ahead and extend extend out this trend line. Didn't quite get to that, but we did gap above that 212.10 level. Got all the way up to 214.94 and then gave some of that back right in that 213 area. Momentum and RSI still very bullish, so you would expect this to push to that upper trend around 217. Similarly on the Dow, gap through the level here, wicked an all-time high for the Dow. High of day was 402.69, and this looks bullish as well. Momentum bullish, RSI bullish. It is a little bit overbought at 70.81, but everything on these charts says that both of these should continue higher. Moving over to Apple and Microsoft, Apple jumped 1.3%, was able to recoup almost all of those losses yesterday, not quite. Still think this is looking like a bit of a topping formation just over a couple of days. And then Microsoft down another 0.25, hit VWAP, still held that 21 EMA, falling a little bit after hours. Seems like this is likely headed down to that trend line around 447. Moving over to Tesla and NVDA, you can see Tesla was up 2.99%, NVIDIA was up 1.44%, but momentum on both of these continue to roll towards that bearish side, still below the SMA on RSI, so both of these still look bearish, even if they were able to recoup some of the losses from the previous day. Moving over to staples and discretionaries, staples was positive 0.44, discretionaries 1.31%, got back above the 189.38 level, so you could have traded that break and then a push. Didn't quite get to the price target, but it was still a good move. This actually looks a lot better than I would have guessed, so we'll see if this can push and touch that level, 193.81. Decent volume as well, not as much as the previous day on that big selling action, but not terrible either. And then you can see staples into bullish momentum, just barely closed below 77.50, so we'll see if that can break next week, but right now this still looks good. Moving over to oil and copper. Oil did sell off to the trend, but it's still holding there. Momentum very slightly bearish. RSI slightly bearish. Copper did bounce, touched the 21 and bounced like we kind of expected it to. Momentum bullish, RSI bullish. Probably headed back towards that 4.69 area. Moving over to RIOT and Marathon. These finally did what we expected them to. They've been holding these zones of consolidation, holding these lows. And then we got a really strong push. So 5.3%, 9.2%. I think Marathon is probably still headed up to that 24-25 area at least. We'll see how that plays. Should get a continuation on Monday. Similarly here with RIOT, I would expect to push back towards this other consolidation around $10, $10.75 or so. We'll see how that plays. But we're coming off a solid base, which continues to hold, and we should get a little bit more bullishness. Moving over to Breadth, did get a continuation higher on Breadth. Still looking for that 86.50 level on 20-day. 50-day went right to the next one, 68.66. Closed basically on top of it after wicking the high there. Momentum and RSI on both of these quite bullish. Moving over to the dollar, this did exactly what we thought it was going to do. Continued back to these lows here from the beginning of June. Momentum bearish, RSI bearish. 1.36 is the next level, and I am still expecting a test of that level. Moving over to the 2-year and the 10-year, you can see the 2-year is continuing to cut to the downside. This is a falling knife at this point. Sliced right through that 4.5 level, headed towards 4.25. Looks like we're going to get normalized conditions here pretty soon. 10-year did fall, but not nearly as much. Still sitting in that 4.18 area, right at the lows from this 14 June wick low. And then you can see this consolidation back here from the end of March. Same zone we've been in for a while, whereas the 2-year just continues to blade down towards that 4.25 area. See how it plays. Seems like we are within striking range of normalized conditions. Moving over to bonds, J&K continues to go higher, looking for this trend here at 95.39. Next level, 95.61. Think we're probably going to get there, start to get out of this range and break higher. It's been holding it for a long time. Seems like we're about to break. Similarly here on TLT, still looking for a test of this trend up around that 96.22 or the 96.50 level. Moving over to the VIX, still in this consolidation. I expected a little bit more upswing today. Didn't quite happen that way, so we'll see how it plays. Momentum rolling back down. Might see another wick of this 1180 area and then see another swing higher. Or we could hold a higher low here and push. We'll see how it plays. Moving over to my accounts, you can see I still have all my same positions. Back to all-time highs on the account values. So the way that I trade, this is usually how it works. I lose a little bit less than markets, and then I don't gain as much, but because I didn't lose as much, I don't need to make nearly as much to get back to those record highs. So we're back there, 141, 232. So good move. Caught a couple $100 on the upside swing. Probably should have been a little bit more than that, but not terrible. Still have my covered call here at 211 for 10 days from now for $4.70. So plenty of protection if we do see a little bit of a reversal on the IWM. And then I rolled out that put I had here. I sold at 213 for today, collected that profit, rolled it out to Monday here for 213 for 80 cents. Might start to wheel that on the IWM in my main account. I do like this as long as the structure continues to be as bullish as it looks right now. And then looking at the Qs, lots of positions here, trying to play some defense. Sold a 497 for Monday for $2 credit. Obviously had a little bit of losses there, but I had all of my calls on, so I was able to protect from that kind of downswing that we got at the end of the session and managed to make a little bit of money there. And then I did sell an XOP here for the end of next week for $1. One strike out of the money there at 145. I still like the oil and gas setup, and I'll be watching that one closely. Still $1 out of the money for a $1 credit. Let me know down in the comment section what you thought of PPI today and how does that correlate with CPI, and when do you think we're going to get that first cut now that we have this most recent inflation data? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.